continuing the all-time high. Hello everyone, this is Ahmed Saleh and this is the weekly market recap. Market is continuing the all-time high for the second week in a row. The good news about this week is that the market is broadening with more companies participating in the rally. Watch out for the Trump tariff next week, and I will answer in this video should you go in or you wait for a correction. Now to the details. Last week we had a short week. We finished early on Thursday and Friday was off. So on Thursday you can see that the market rallied even strongly because of the job report. Same is happening on the NASDAQ. We had a correction on Tuesday. After that we had very good 1.5 days on Wednesday and Thursday. So we closed June with 5% and 6% in the S&P and NASDAQ. That's coming on top of May of 6 and 9%. July week 1 is continuing this trend. The year to date is 7% in both the S&P and NASDAQ and the S&P equal weight. We are lagging in the Russell 2000. But the good news is that Russell is starting to catch up last week. One thing to note is that the increase was very strong in the last couple of weeks. Just 2 weeks ago, we were at 1% for each of the S&P and NASDAQ, and now we are at 7%. On Thursday, we had the good job report. That fueled the momentum up. Yes, it means that the interest rate will not go down because there is a good job market, so the market is able to function with the current interest rate. So the investors are really valuing the good economy over the interest rate cut. They prefer to have a good economy even with a high interest rate versus having an interest rate cut with a bad economy. So that's the key message that happened last week. A good job report, good economy is still better for the investors. Now I will answer the question about should you wait for a correction or go in. What I would prefer is to go in. And I learned my lesson after 2008, so the collapse that we have in 2008, and then the market started to rally up. And then after that, I was waiting for a correction, and this correction took about 5 years to happen. So the learning of that lesson is that go in small, start increasing your position after that slowly, and as long as the market is giving you signals that it's going up, then start to go in more and more aggressively, start to increase your positions, start to increase the number of stocks as long as you are making progress. And what is making me say this is that last week we had the new highs at 93%. That was on Thursday, and the new low, there was literally nothing, no companies having new lows last week. So many companies are achieving new highs every day. And also, if you look at the companies above their simple moving average 50, you will see that 78% of the companies are above the simple moving average 50. This is a very good number. And also for the companies above the simple moving 200, there is 61%. As long as this is above 50%, it means more companies are going above the 200 days moving average. And this is a good indication. So whenever you see these statistics aligned in front of you, you go in. Once this start to change, then start to go out of the market. This data is from the finviz.com. Next week, I expect a volatile Monday because when the market is off for 1.5 days and then we have 2 days off, there are lots of incidents that happen during these days. You have the tariff, you have the new party by Elon Musk, you have the big beautiful bill that was signed on July 4th. So you have lots of incidents. The market needs to absorb this, and we'll see the effect of all these events on Monday. So we'll see what will happen during that day. Wednesday, this is the tariff deadline, July 9th. So watch out from what Trump will do. He normally surprises the market. So let's see what's going to happen. And Thursday, we have the first result for the new season from Delta Airline. My trading strategy is to go for the ETFs and or stocks that are breaking out, achieving 52 weeks high and all-time high. Let's see example of these stocks. So the first one is the QQQ. This is mirroring the NASDAQ. And as you can see, it's exactly performing as the NASDAQ. If you cannot select stocks, just go into the QQQ. Or you go into the SPY, which is mirroring the S&P 500. So you get exactly the same performance. Year to date, you'll get 7%. If you cannot select stocks, just go into these two ETFs. If you want to be more concentrated, then you can go to the technology sector and you buy the ETF called XLK. It is doing very nice, and it is the one that is driving the QQQ and the NASDAQ, or you can go to the financial sector. Financial sector is leading the market as well because they passed the stress test recently and they started distributing good dividend. So you can go to the bank ETF, which is KBWB. It's doing very well. On individual companies, you can select CLS, is going very nice, or you can select Cheesecake Factory, it's also doing very nice. That was it for this week. I wish you a profitable trade, everyone. If you like this video, please press like, share it with your friends, subscribe to the channel, and if you have any question, please put it in the comment. This video is for educational purpose only and should not be considered as a financial advice. Any investment or trade you make is at your own risk. And thank you very much. Have a great week, everyone.